Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the Canadian MJ names. I'm going to put out a US MJ video tomorrow at some point, and then with the Chart Guys team, we're going to be compiling our list for Q1 2019 of tightening daily equilibriums to be watching, tightening weekly equilibriums to be watching, and how to proceed going forward. So a very significant bull break in the market today due to some fundamental reasons I go over in the SPY video. That's a complete shift in sentiment in the market, which is good for everybody, every sector, but we're not seeing it in these major Canadian MJ names. One thing I want to point out is we're not necessarily wanting to look at Canadian versus US MJ right now. If you're investing and looking long term, absolutely you want to know what regions they're trading in. But in terms of trading and in terms of risk to reward and percentage gain possibility, in my opinion, we're separating these names between names that have already blown up and gone mainstream with regards to institutional investment, dual listing on major exchanges. They're on one side. That's your CGC, CRON, TLRY, APHA, ACB. And then you have everybody else, all these smaller cap names. They're on the other side. They have the higher risk to reward, more bang for your buck percentage movers. And the reason for that is liquidity. It all comes down to liquidity. And when you have major institutions and major money in these stocks and market caps of many billions of dollars, a huge move is 100%. That's a massive move. In my opinion, we're never going to see these names run like we did in 2017. It's never going to happen again for the names that have already run this much. Because to see a name, go in a short amount of time, obviously time's a big factor in this. So even over a few months, for one of these names to go 100%, it's going to be an absolutely massive move. Whereas for a name like N or HEXO, for these names to go 100%, it doesn't take that much dollar volume to move them. So when you have huge liquidity, you have tons of supply of shares and tons of demand of shares. And it's this constant fluctuation. You have more market makers on the bids and asks creating this market. And so when there's a run on shares, when there's a surge in demand, there's a lot of supply to meet that. And we don't see as significant a surge. So in my opinion, long term, can these companies go up a couple 100%, a few 100%? Absolutely. But in terms of seeing what we saw with the huge moves in 2016, 2017, it's never going to happen with these companies again because they already blew up. They already made it. Think of it this way, and this just popped into my head right now. Imagine you're a band and you're a starting band and you get really popular and you take off and you're on MTV and I don't even know if they still play music, but you know what I mean. So your fan base, percentage-wise, is going to exponentially increase massively to start off. Now, if you look at a band like Coldplay, or if you look at Beyonce or Madonna or all these people, what's the percentage that their fan base is increasing year after year now that they've already blown up? They already made it. They already hit the spotlight. They had huge exponential gains all through the start of their career. Now they made it. And you're not going to see, a 50% increase in fan base in 2 years on Coldplay because they've already had such a massive fan base increase of however many tens of millions of people. So it's the same thing. These names that are small caps that don't have huge institutional investments, they're not dual listed on multiple exchanges. This is pretty much all US MJ names and a significant amount of Canadian MJ names as well. But they're in their starting. They're just, getting known. They're just getting well known. And going back to the fan base analogy, they have a small fan base. So to see 100% increase in their fan base, that can happen on one appearance on the right venue, if it's, live streamed and everybody watches it and one of their videos goes viral. So that's a comparison to make. And again, you just look at HEXO, which we'll look at a little bit more in depth here at the end, but we just saw a bull move of 45% in 7 days. In my opinion, we're never going to see CGC go 45% in 7 days unless there is, absolute massive best case scenario ever news, which is possible, but not a likely scenario. So that's just my viewpoint on separating the sector between names that have already made it and blown up in the spotlight and names that have not. And it's all to do with liquidity, institutional investments, market makers, and everything that I just said. So CGC, disappointing day for everybody on these major MJ names. Disappointing day. The regular stock market, the S&P 500, went up 3+%, and CGC didn't do anything. So correlations are present, but not strong, obviously. And we have multiple daily inside bars. Actually, I take that back. We did break the low of yesterday just by 9 cents. So 28.01, 28.10 were a couple support levels. And there's nothing, glaringly bearish right now, aside from the fact that we should be a little bit more bullish. So that in itself is a bit of a red flag. The weekly time frame is still a possible bear flag at this point. We do not have enough bounce to say, this is not a bear flag, because it certainly has that shape right now. So the daily time frame, again, after 28.01 support, there's a lack of support down to 26.30. That's the next level to be watching. And as far as resistance goes, the hourly time frame, we topped out at 28.93 with a double top, and it's just CGC is a king of double tops the past couple days. 29.30, 29.27, and we double topped on the daily. Now we double topped on the hourly. And if we break 28.01, further consolidation is going to be coming. I'm still in my swing position, and I'm going to exit break even in the 27.80 range if we do drop down to that level, because again, not seeing any of the follow through that we would like to see at this point. So still skeptical of the major names. CGC not proving enough with the correlation to the S&P 500. So it's not a daily bear flag in my opinion. We're not just going to drop straight to lower lows, but it is a potential weekly bear flag still. Cron on the daily time frame, inside bar, so we'll watch this tight range on Monday. Nice little top fishing play today. We rejected from resistance by 9 cents and ended up pulling back a decent amount from that rejection. We rejected at 12.10 and pulled back to 11.73. So that's an opportunity for about 3% gains from that initial top fishing play. And then we ended up pulling back even further into the end of the day. But it's all about the inside bar. So if we see a break of 11.65 on Monday, we're going to look to pull back and form a daily higher low compared to 10.04. And if we see a bull break of 12.10, we're looking at 12.19, and that would be a great sign due to lack of resistance after 12.19 if the bulls were able to break that level. But don't lose sight, the weekly time frame, we're looking for an equilibrium on Cron. That's definitely going to be on our weekly equilibrium list that we're going to put together, because we're anticipating a lower high compared to 13.95, then we'll look for a higher low compared to 9.56, and we're going to look for a break sometime probably in February of this tightening pattern for Cron. APHA on the daily, still sideways, not a ton going on here. We broke a couple resistance levels, didn't get much follow through. We broke resistance by 3 pennies. And still have a higher low pattern as long as the daily support of 545 holds. To see a clear bull break, we're going to have to get a break of 637. That's the most important short-term resistance. And you can see we've pretty much been trading within this channel for the last 7 days. There's a lot of percentage range within that channel, but until we get a break, that is the clarity that we are going to be waiting for on APHA. ACB, sideways as well, really struggling with this 12-period exponential moving average resistance here, but essentially we're looking up at 722, 719, 717, 714, 717, so there is clear resistance there. And just comparing it to the US side of things, because we did see a break on the US side of things of these resistance levels, and we did not get a break on the Canadian side of things. So the bull break of 530 was a nice sign on the US side of things, but this is where it's important to be keeping an eye on both, because seeing that the Canadian side was not following along and did not break its resistances could definitely give you some clues as to red flags for the bulls. So it's all about 722 resistance, and we have higher lows each day. So 690 is key support, and 722 is key resistance. If we break 690, we're looking down towards 659 again. And if we break 722, then we'll look for follow through, but that's the level that we have to break. And again, sideways trading 5-6 days in a row here for a lot of these names in this sector. TLRY, sideways trading still within its tightening range. Equilibrium is close to breaking, but we're not there just yet. And building a base of support, or attempting to, in the upper 60s, bulls have to see a break of 72.18 and then 77.27 as 2 short-term resistances. And the key support is 67.77 and 67.66. Those are the 2 key levels in the short term to be watching. So all 5 of those names, those are our standard Canadian MJ names that we cover, because they are really the largest caps, the most significant dollar volume, and they were the biggest movers. And in 2019, I don't believe they're going to be the biggest movers, and I do believe there are going to be some surprises as to who is. So OGI at this point has seen a 50% move. OGI and HEXO, 50% in the last 7 days. That is very significant. And what dollar volume did it take to do that? So just a rough estimation, if we're looking here at OGI in Canada, we got 4.9 million on volume. And then whenever I'm estimating volume and I see a candlestick like this, I'll just look roughly in the middle. I'll say, all right, let's call it 540. So if we're talking $5 million volume at 540, we're talking roughly $25-30 million. And that's just, again, a very rough estimation, but let's call it 30 million. Let's take the upper end, $30 million to make that price move that significantly. And you look at, of course, any of these other names and the weekly volume that we saw here, and we're talking 150 million, 500% more volume on these names. And obviously the price not moving as much. And again, it all boils down to liquidity. And there's less liquidity in these names. So when there's a surge in demand or supply, I mean, we pulled back so significantly percentage-wise here because of the same reason, lack of liquidity and price moving back more significantly. But here we are going the other direction, and a daily inside bar here as well. So that's giving us an hourly equilibrium to be watching into Monday. We got the high of the bull move, the low of 554, a lower high at 595, and we're going to look for a higher low to form compared to 554. Bulls are hoping it's at 567 here, but a nice tight range to be watching. If we get the bull break of 595, we're looking at 602 and 613. And if we get the bear break of the daily inside bar, then we're looking for healthy daily consolidation, which we know is due in the short term, and we'll look for a daily higher low to be established on that consolidation. And significant bull move. We knew we were oversold, got the little higher low and bull break of 89 cents. Inside bar here as well. So again, hourly is a tightening pattern. High of the bull move, low of consolidation. Want to make sure these numbers line up with my magnet. 123 and 105, lower high at 118, and the bulls are attempting to form a higher low at 112. So a tightening range here as well. You can use the daily inside bar. If it breaks bearish on Monday, healthy daily consolidation to form a higher low. Ideally holding one psychological is coming. And if we get the bull break, that means the move is not done yet. And again, dollar volume is not significantly required here on this move. This entire bull move, we're talking 15, 20, we'll call it $25 million in 3 days here. HEXO continuation, so not a daily inside bar, so stronger than those other two names. It too has seen the 50% roughly move, and the hourly uptrend is intact. As long as that remains the case, we're going to hold off on daily consolidation. New base of support is 574. If that breaks on Monday, daily consolidation will begin, and we'll be looking for a higher low to form somewhere in the low $5 range. And again, all of these names that are breaking resistance with these big runs this week, they have to still confirm the daily trend change with a higher low and higher high. Because if that doesn't happen, then this is just a short-term fluke of a pump. That will show us if we don't get confirmation with a higher low and continuation, that shows us it was a pump. People took their profit and they didn't get back in, as opposed to people sitting on the sidelines saying, I'm waiting for daily consolidation to enter. And in that instance, we would form a higher low and then look for that continuation move. So the most important things for me in January in this sector are going to be the tightening ranges, the equilibrium plays that are setting up that we're going to be watching for breaks of, and also all of these names that are pumping these small caps. Can they confirm their daily trends with higher lows and higher highs? And is the spotlight going to shift away, at least for retail day traders and retail short-term traders? Again, if you're looking long-term, you want these well-established companies that have all this liquidity, and that's the previous 5 names that we just looked at. But if you're looking for short-term gains and day trading and higher risk and higher reward opportunity, it's going to be these low-cap names that are not dual listed yet. So those are my opinions on the subject, and we'll get those U.S. names in the video tomorrow, and hope you all have a good rest of your weekend, or a good start of your weekend. Deep sheep peeping.